Hello guys, so today we're going to be doing a top-down analysis for the week. Okay, so I'm going to be analyzing some pairs live for you to see, and I hope this helps your week. So you can see that we have USD against the Swiss francs. So I'm going to start with that pair, and I like to start with the monthly time frame just to have a general idea of what the market is doing. And I want to mark out the old highs and old lows because yeah, that's where liquidity is resting. And if there's one thing the market is always looking for, it's always looking for where liquidity is resting. So you can see that that's the last low we had below there, and you can notice that the monthly candle is in a really massive buy after a bit of consolidation. So if you check the monthly candle, you can see that it's been on a massive buy. Look at that big candle. It has been on a massive buy the whole month of March. So we're going to scale down to the weekly and see what the market has been doing. Like I said, look at below here, the market did a bit of consolidation before it started moving. So we're just going to look out for where liquidity is resting, and let's see what the market's trying to do. Why is it going to the upside? There has to be a reason. It has to be looking for something, right? So you can see that we have a lot of old highs there that price has not come back to take out. We have a lot of buy side liquidity resting, and the market is sure to come back to those places to take out liquidity. And so I think that is why the buy is happening. So if we move to the daily time frame, I already marked out some of the structures before I started this video. So if you move to the daily time frame, I was just looking out for what price has been doing the entire week. I did not trade this pair this week, so I was just looking at what price has been doing, and so far so good. Price has been reacting accordingly, breaking structures nicely, reacting to imbalances. Look at that fair value gap. Price touched it and moved massively to the upside. So if you had set a limit order there, you would have gotten a really good 2 weeks to reward from that kind of trade. So this is the last break of structure we have, so we're just going to use the fib tool to try and get the 50% level, because what I'm anticipating is that price will likely come back to the 50% level and mitigate this part and continue. But then again, why I'm not so sure that market will likely want to return to this point is because there are no imbalances in the market. So the market has been buying, but it has been doing a lot of balancing in itself. So there's really not a lot of imbalance in the market, as you can see. So I'm going to zoom closer so you can see this is what I'm anticipating. But I'm skeptical because market has just been going like the move is not exactly, like there's no displacement in the moves. The volume isn't much, so we'll scale down lower so we'll have a clearer view of what the market is doing. So look at it, you can see that there isn't really a lot of imbalance. Look at that place, market took out liquidity, and the structures have not been clear for the previous weeks. It just started getting clearer this week. Price already cleared out that liquidity, so this is the new low that we have as long as this move is concerned. And if you scale to the higher time frame, these are all fractal breaks. Okay, these are like internal break of structures, and market has been reacting to each and every one of it. That's why I'm saying that price might likely not want to return now until it clears out the buy side liquidity. But fingers crossed, the move is still a lot. So if we can get, the move is still a lot. So if we can be able to join the buy, we will be able to join this buy. So but this is what I'm thinking that price might do. Price might keep breaking, creating internal break of structures until it gets to that buy side liquidity. So that's why I'm a bit skeptical about the market returning all the way to our 50% zone on the higher time frame, because there is really no imbalance in the market, like I said earlier. And when there is no imbalance or displacement in the market tends to move away from that part. So, do your own analysis. Don't take my word for it. Okay, this is my so scaling down. This is a 1 hour time frame, and you can see that, like I said, market has been creating a lot of internal structures. So don't it's very, very important when you're doing your analysis, don't ignore these fractal structures, because they come in handy, and price respects them, especially the ones that come with momentum. You can see this break of structure right here. The price came over to the other block, and price tapped on the midpoint of that other block and moved massively. This should give you at least a 1:7 or 1:8 risk to reward, and this is a really good trade. And if you were patient enough to wait for this move, this is a really, really good trade. So yeah, look at that move. Price just kept going. Price never came back to your entry. It was just ahead until it got to your take profit. So that's what I'm saying. Like, if you looked at the market from the higher time frame, you would think that the market was just moving without breaking. But when we scale down to the lower time frame, you notice that market was actually giving internal breaker structures. It was giving lows and highs. It was giving higher highs and higher lows to the upside. So it was filling imbalances, although there was a bit of consolidation, but like the market just kept moving. And that's why I'm skeptical about price coming returning all the way to our entry point on the higher time frame before it will go to the buy side liquidity. But after the even here, after that break of structure, you can see that price has also, so this is the latest break of structure we have on the 15-minute time, and this is usually my entry time frame. So if I'm to take this trade, this is where I'm going to be looking for an entry, and we have a nice and beautiful imbalance right here. So like I said, the market looks for imbalances and liquidity to fill. So this is a very nice imbalance right here. We have an order block too that has not been mitigated over there, and price will likely react to this before it continues. And let's just keep our fingers crossed. So that is the other block that we have right there. It's another block that tapped into the other breaker structure to before that gave that move, that push to the upside. So um, price might likely want to come and tap into that other block or the imbalance to continue its move to the upside. Remember, we are looking for price to go and clear the buy side liquidity that we have. That's why we're looking for longs, and our monthly candle already told us that we are bullish. So whatever it is you're doing, you want to look for buy opportunities. Remember, the trend is your friend. You don't want to trade against the trend, trade with the trend. So that's why we're looking for bullish opportunities. And if we use our FIP retracement tool right here, you can see that the 50%, the imbalance we have is right after the 50% level. So that is in a discount area, and so price can likely react from there. If you get an entry from there, it's a really, really good entry, and it will give you a good risk to reward. So you can target the high where the FIP tool stops, and that could at least give you like a 1:3, 1:4 risk to reward. Your stop loss can just be below the imbalance, but you want to wait for, you want to scale down to a lower time frame. If you're taking your entries from the 15-minute, you want to scale down to the lower time frame and look for what price will do. You want to see what the candle is doing or what price will do before you take an entry. So it doesn't mean that as soon as price taps into the imbalance, you should take a trade. You want to see price tap into it, create a market structure shift, and then you look for the imbalance in the market structure shift and take your pending order there. And this trade can is like a 1:4 risk to reward. If your stop loss is like below the imbalance. So this is not going to be a bad trade, but if this is not enough for you, you can target all the way up to the buy side liquidity, which is our target. Okay, so this about USD chef. I hope you learned something, and like I said, do your own analysis, do your own research. Don't take my word for it. Okay, this is me just speculating. I'm not saying that this is what the market must do, but based on my strategy and how I trade, I think this is what the market will do. So that brings us to our trade on Euro USD. Now I did post the video on Euro USD. It's on the channel. Check my shorts. And this sell, I posted a video about the limit order, and so because the price was still a bit far, so I had to take the sell that would take me to where the limit order would be. And price is almost at our TP. But truth be told, I actually closed this market on Friday because most times you notice that when the market opens on Sunday during the Asian session, there's always a gap. Like the market could just jump for no reason to your stop loss and jump back to your direction. So I did not want to take that risk. So and I did break even, but then again I just said, let me just close because there's no reason for me to wait. So but I'm looking at the market clearing all of this sell side liquidity. So for that buy limit, I'm going to wait for market. I'm expecting the market to clear all of this liquidity. So even if it gives me a fake breakout, I'm not going to take it until market clears all of those old lows, because market will definitely want to reach there. It may not be immediately, but news will take it there. So for now, I could still be looking for sell opportunities, or I could just leave the market. So this is NZD-USD. You can see like the move is almost the same. The market is moving to that imbalance. So most times Euro USD, NZD-USD, odd USD, they all almost have similar movement. So if I'm trading one out of the three pairs, I just stick to that one. There's no reason for me to trade all three in the same direction. So odd USD, I think, is also moving to that other block right there. So let's so over to the next pair, we have GBP CHF. I don't exactly trade this pair that much, but I like the move. I haven't traded it for a while. I've just been on Euro USD. So we have this nice break of structure here. This is a daily time frame, by the way. So we have that nice break of structure right here. Okay, let's just start with the monthly and see what the monthly candle has been up to. It has been on a massive downtrend for a while. Now. So let's just see up to on the monthly time frame. So that is the so this is a sell side liquidity because that is the last low. Okay, market has not been able to clear that place ever since price got there, and so I'm just going to mark that place out as my liquidity area. So I was expecting price to clear out that zone before it moved, but you can see on the monthly time frame that the candle is also really bullish. Remember when we did our analysis on USD CHF, it's almost similar. I think it's like these are pairs that move. These are pairs that have similar moves. So sometimes when USD CHF is buying, you can see that it's buying, and we have that nice break of structure right there, and that rejection candle. So price might just want to get to that other block above there and come down to the downside, probably to sweep liquidity maybe before it continues to the upside. But for now, I don't exactly have a setup here, but let's just scale down to the lower time frame to really see what market has been up to. So look at that nice break of structure, and price has just been going to probably that's a retracement. Okay, because you can see that it doesn't exactly have momentum. So if we use our fib tool to check the movement of that is a high, that is the highest point for this break of structure. That is where price got to. So let's zoom in more to see. Of course, you know how we do it. We're going to scale down from the monthly down to the 15-minute time frame. So using our fib tool, the market is already in the premium area. So I'm not saying that as soon as the market gets to the premium area, you should sell, but you can see that the market is in a premium zone. And if you look at that candle, that is a daily candle, that is a rejection candle, a rejection to the downside. So that should already tell you that the sellers are stepping in. So you should not be thinking of going long in this market anymore. So we have to watch the market closely to see what it's doing, and that should tell us what we are also doing. There was an imbalance, there was a fair value gap right there that the market went to fill, and price also touched the other block after the fair value gap, and market is giving rejection. So if you scale down to the 4-hour time frame, let's just remove this fib too. If you scale down to the 4-hour time frame, and you see that after market reacted to that imbalance. Okay, market reacted massively to that imbalance. Look at the push to the downside as soon as market touched that imbalance, right? So even here you can see that, listen, just look for imbalances in the market. I promise you, the market will always come back to it. That is one thing you should always remember. Even if you not get anything out of this video, remember that the market looks for imbalances. This is I'm going to call that a liquidity grab, because the market just came down, swept that liquidity and pushed massively with a lot of momentum to the upside. And what the price do? Price came back to the midpoint of the 50% level of that imbalance, and market moved massively. So look at it. These things are predictable. These things are easy for you to see in the market. Okay, it's not magic. You can do it too. It's just you need to just do a back test, check all these things and see if they work. Look at market reacted in that imbalance and pushed to the let's use the fib tool to check. Look at it. Market reacted at the 50% level. So market came down to the discount area right there before reacting massively to the upside. So if you had caught this move, market would just buy all the way to the imbalance up there. And as soon as market touched that imbalance, look at that sell candle. It was also massive. So the market looks for imbalances. No this and no peace. So right now, I think that's like an internal breaker structure. But I think what the market is doing right now is giving all of this rejection. So what I am looking to see in this market, I want it to give me a market structure shift. If I get a market structure shift, so look at that rejection week is really, really long. So what I'm looking at in this market, that is the highest point that price got to. So what I'm looking at in this market, I'm looking at I'm looking at two scenarios now. If price breaks this low right here, if price breaks this low, remember this is the 4-hour time frame, so it's a lot of data. If price breaks that low, right, and gives me a market structure shift, what I'm going to do is look for shorts. I know that the market has changed direction. But if price, if market gets to that point, I'm going to look for a selling opportunity. So this is what I'm looking at on GBP's CHF. But like I said, we're not sure yet what the market's going to do. So for now, I do not have a setup. So I'm just going to wait for the market to open and react accordingly. So do your own analysis, drop your comments in the comment section, tell me what you think. Okay, the goal is for us to make money in this channel, so I'm just going to set an alert there for whenever the market breaks that point. And so TradingView can send me a notification, and I can be alert to know that okay, it's time for me to start looking for selling opportunities. So that will be all for today. Thank you guys so much for watching. I wish you a fruitful and a productive, profitable week. Bye, guys. And please remember to subscribe. We have more content like this coming. Bye.